Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I think it's strap in for a long one this week, Curtis, because we've got a lot to cover. So it's going to be a busy one, but a nice time to do it with the long bank holiday weekend.
Yeah, we think of everything, don't we? So if you're enjoying your Easter weekend, then we've got probably a longer than normal show for you, because we've got a couple of interviews, we've got a couple of guests, and we've actually got a lot of headlines to get through as well.
We have, yeah, and I know it's the end of the month, it's the end of the first quarter. Reports this week, and we'll get onto some of the activity, but reports this week is the dealers are pretty busy at the minute in terms of that sort of performance and registrations and last minute registration conversations, should we say, in terms of some of that last minute activity, which I think I would say that many will be looking forward to an Easter Sunday day off across the sector after a last minute rush, because it's good to have that bank holiday weekend, but I'm not sure it's come at the right time for the new car market.
No, definitely not. And it's interesting what you're saying about March, because you and I were talking about this last week. Have we seen many 24 plates? But Dale Wyatt earlier in the week actually went on LinkedIn to talk about March, which is fairly unusual for an OEM to be talking about the market before it closes and the SMMT produce the figures, which certainly we'll have next weekend to talk about. But certainly up until Tuesday, Dale was saying that the market was up 8% year on year. But as he goes on to say, the devil is very much in the detail, because retail sales were down by 5%. And the top three performing brands by volume were Mercedes, Audi, and BMW. And he goes on to say, I mean, he makes some great points in this. He says retail mainstream consumers are cautious and confused. And he goes on to say how, while the headlines are all about agencies, EV and all that, EVs, he says what dealers are talking about, because he talks to a lot of dealers over the course of any given week, is he's saying that the dealer chatter is all about rising cost and depressed volumes and margins. So that's very much the real world at the moment.
Yeah, and I mean, with this week we had a vehicle remarketing last week. Sorry, a vehicle remarketing association members meeting, and we are due, which was talking about EVs and EV parity of price in the used vehicle market, with some insight from Andy Shields from Indicator, who we've had on previously on the podcast, and is probably due on again to give some updates on the podcast. But interesting, we are with Dale on the 16th of May at the next VRA members meeting down in Milton Keynes, where, along with other sort of market insight and an update from the FCA DCA findings from Geldard's, Dale will be sharing their 5-year EV strategy at that event. So very much looking forward to sitting down with Dale again and getting some views on the market and what Suzuki feel the next 5 years for them will look like in the world of battery electric vehicles.
Yeah, and funnily enough, we'll be returning to battery electric vehicles over the course of this pod. But another shout out, this week we caught up with CAP HPI's Jeremy Yeh, who was talking about how the used car valuations performed over the course of March, and it's a great interview. Jeremy shed a lot of light not just on March but also Q1. So we'll have an extract from that interview on today's pod, but do catch the full interview, which is on your podcast feed.
Yeah, you were very relaxed and very insightful. It was a good, fantastic conversation there, especially towards the end when you started to talk about what they expect for April as we head into the sort of second quarter of the year. So as Curtis said there, don't miss the full interview, but we will share a snippet on today's podcast. And also today we get the fortnightly update from our mental wealth guru, Stephen Whitten, who will be spreading some Easter joy. So do stay tuned for that one on today's podcast.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Car Dealer, AM Online, Autocar Business, Reuters, and the FT. And Phil, you'll notice there's a theme running through this week's headlines because they're all sort of closely linked with OEMs, car makers, and dealers. So starting with Hyundai to cut UK dealer partners, saying it needs to future-proof its network. Ford pulls back on agency and announces a network trim. Omoda reveals UK plans for its network. Mini and BMW top brand loyalty list for customers, reports Judge Service. Problems mount for Fisker after deal with unnamed car maker falls through. And Nissan joins list of OEMs looking for partnerships to cut EV costs.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And before we take a closer look at those headlines, here's an extract from our conversation earlier in the week with CAP HPI's Jeremy Yeh, taking us through March's used car value trends.
I mean, as always, let's start off, talk us through the headline movement for the month at 3 years 60, which is down 0.1%, which is approximately £70, and how they fit into the movements over the course of the first quarter.
So as you just alluded to there, a 0.1 drop within the March going into April monthly figure, which is just marks a really stable month for used cars, certainly at the 3 years, and it fits in quite nicely, I guess, with quarter one. Quarter one is overall positive for the first 3 months of the year, with a small increase, which I guess we'll go through in a minute. But yeah, it's been a real stable and solid month, I would say, extended on from January and February.
And was there much fluctuation over the course of the month? Because obviously, we talk about the month end, that snapshot in time for the monthly book, but we know that you're monitoring the values daily, and that sometimes gives you a bit of a story as the month progresses, because we've gone quite very quickly towards the Easter period. Did you see much fluctuation through the month and how the month sort of panned out?
Not really. The month started off obviously flat in terms of the movement, so a 0% movement. It took a while to get to 0.1% down, and I think the highest it got to, or the lowest it got to, was 0.2% down, but fluctuated in between sort of 0.2 and 0.1 over the course of a few days. So we didn't see any sort of heavy movements downward or upwards. There is some obviously difference in terms of some of the fuel types and whatever, but the overall headline movement didn't really move. It was pretty static.
Yeah, and I guess that goes back to what you were saying, Jeremy, about this sort of welcome stability that's sort of creeping into valuations. Looking at age bands specifically, were there any notable trends over the course of March?
So I'll start with a younger age point. So 1 year dropped equal to 3 years, actually, at 0.1, which is around 157 quid at 1 year. And as Phil said earlier, it's circa £70 movement at 3 years. It's the older age points, certainly around that 10-year age point. 5 years was reasonably stable. There's probably a bit condition related in there, but that dropped 0.7. And overall, that was about nearly £90 movement. But it's the 10-year 100k, which is pretty volatile, I would say. It's just probably sum it up. There's some good and bad within that older age group, but generally older cars have come under more pressure. I think there's an aging car park in general where obviously we've had a lack of new car registrations over the course, and that cycle of new cars coming through over a 3 or 4 year period. And that's definitely evident now, where people have probably held and retained cars for longer. They've collated more miles, they've collated more damage. And I think that's equal to a sort of a more negative movement going into throughout Q1. And I think some of those damaged and mechanically challenged cars have been, they've been sold, but been sold on prices and probably nowhere near to even clean or average figures.
I mean, as I say, the Curtis before, I mean, there's some insight there definitely for what has happened through the month of March. But clearly, as I say, the full interview is on the podcast feed to get a view as to what's been happening and what he expects for the future.
Yeah, and what we didn't share in that particular extract was Jeremy's views on how fuel trends, how fuel trended over the course of March, because there's a lot of interest in that EV market, how values are performing. So he does go into more detail on that, as well as dealer stocking trends, and as you mentioned, his forecast for April. So definitely worth a listen.
Yeah. So over to the headlines, and as Curtis said right at the start there, that we're heading over to car dealer to begin with, and that Hyundai to cut number of UK dealers it works with as it looks to future-proof the network. And this is based in that Hyundai reveals plans to work with fewer dealer partners in the UK. It's looking to streamline its network, and saying that it currently has a tally of 70 partners, which will be cut to as little as 55 by 28 to 29 there, and that the number of showrooms will eventually increase from 165 to 173, and that a third of the current sites will be encouraged to enhance themselves. That's an interesting reference there, Curtis.
Yes.
An evolution initiatives aims to increase profitability as brand transform. So very much laying out their plans for the future in terms of their growth ambitions and obviously their dealer partners.
Yes, and it is an interesting one, this, isn't it? Because the Hyundai network has grown over the years, and it is a sizable. It has really good representation now. So, what is particularly interesting about this story is that it's actually looking to expand the number of retail outlets that it's got, while decreasing the number of partners it's worked with. And this is something we've seen with other manufacturers over the years. The ideal scenario for a manufacturer is to have a good geographical spread, but work with as few partners as possible. And this is the way Hyundai is going. Hyundai very much committed to the franchise model. It's not looking at agency, and this is its long-term plan now. So it is quite revealing. It's saying that it's not going to focus on those sort of big sites in terms of what it wants to invest in the future in terms of partnerships. So big groups will be evaluated in the same way as smaller family-run sites. So it really is looking at those prime locations.
And it is interesting because you allude to other manufacturers, but we've seen it. I mean, if you've if we've been around long enough, and I think me and you can safely say we have been in the industry long enough now, Curtis, but we've seen manufacturers over the decades that have really expanded and spread their dealer partners to sort of get coverage and then contract it again. And really say, well, actually, it's easy to have conversations about development and investment with fewer partners. It's a better conversation, etc. But then you get to a point where the dominance of certain partners cause them issues because they're who becomes in control of their volume and market share. So it's interesting that Hyundai are now going down this, but I think it sort of has worked for many manufacturers over the years that fewer partners with that tighter relationship does seem to work.
Yeah, and I'm sure that there'll be alarm bells ringing across the Hyundai network, because you mentioned about a third of the network will be encouraged to enhance their operations. And from this story, it looks though that includes facilities, infrastructure, performance and stuff. Yeah, and that all costs money.
Yes, yeah, that does mean cash and investment and things like that. So, and that will be part of that partnership discussion, won't it? Who wants to get involved? Who wants to be a partner with us as we go through this new strategy? But as part of that, this is what we will be expecting from you. So it'll be an interesting one to watch as it fleshes out.
And staying with car dealer, the next headline is Omoda and Jayco brands aiming for 100 dealers and 10,000 sales in UK by end of 2024. So that's a pretty bold target. So Omoda and Jayco both sit under the Chery platform, Chery, massive car maker in China, and it has shed quite a bit of light on what it plans to do in the UK. And at the moment, it already has deals signed with over 60 partners. And there's some big names there, including Arnold Clark, Endeavour Automotive, Listers, Cambria, Peoples, and Martins Group. And the plan reveals that dealers will take both the Omoda and Jayco brands. So Omoda is more the sort of mainstream. They're both the EV brands. Omoda is sort of more mainstream. Jayco is more upmarket, more premium. And Jayco arrives in September. Omoda's already on sale.
Yeah, I mean it's an interesting one. This one, I think it's 100. Was that the figure that BYD had aspiration for?
Yeah, I think it is. Yeah.
By the end of this year. So obviously both, they're all moving very, very quickly. And interesting, we're talking about that this week because there's been some conversation about the Chinese EV brands in the government in politics this week, aren't there, about data and the risk of data and things like this. And
yes,
and the automotive sector is being mentioned for the wrong reasons in politics this week. But again, I mean, you look at the previous story there where there is partners that are potentially going to be cut from the Hyundai network, then maybe this is where these partners will be looking at other opportunities with these new brands coming into the UK and their aspirational growth. So yeah, it's going to be interesting to see because, as you say there, Curtis, that very much both sides of the spectrum there. That more mainstream entry point to the more luxurious premium brand is where they're looking to see their growth.
And significantly, they are looking at fleet. So according to UK executives quoted in the story, 40% of those overall 10,000 sales are targeted at fleet. So Omoda or Chery has clearly been looking at the success of MG in the fleet sector and wants a piece of that particular pie.
And sticking with OEMs, and there's been a bit of a news this week coming out of Ford that's been reported on the Autocar Business platform, and that it's Ford backs European franchise dealers in agency U-turn. Someone had to use that word again, didn't they, Curtis?
Yeah, I can hear Steve Young from ICDP tutting already.
So this is that reports are that the company will maintain traditional dealer model with assistance of data sharing, but it will be also downsizing its network. Now, this is reports for the European market, saying that Ford has backed down on plans to implement the agency sales model across its European retail network, sticking with franchises but downsizing its dealer network to reflect its lower sales aspiration.
Yeah, and I mentioned Steve Young. We did talk to him last week, and there's a standalone episode, and worth listening to if you haven't heard it, because he does go into quite a bit of detail about the recent announcements from various manufacturers on agency. And he really sort of queries the use of pausing and U-turns, because he makes the point that any OEM looking at agency is looking long term, and it's best part of a 5-year plan from start to finish to actually implement agency. So any brands that were thinking about it, they've done the research, and they're not going to roll it out until they're good and ready, which I suspect this is the case with Ford, because the undertaking for Ford is absolutely massive.
Big I mean, we talk about network volume,
Yeah.
we talk about network partners, and it's a big network that they'd have to sort of transition at some scale, wouldn't they?
Yeah, definitely. So yes, they won't be introducing it next year, which is what the original plan was, from my understanding. But I think we can safely assume that they will be monitoring it very, very closely, and they will continue looking at it. And also the way they brought the Mustang Mach-E range to market, that operates under a sort of quasi agency model. So they'll be looking at how that works, and that will all be fed into what their future plans are.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men Able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whittam. Yeah, hi guys, it's Men Able Moments time again. Hope you're well and happy Easter. Wow, can you believe it's Easter already? That means there's like a quarter of the year gone. Oh, hang on, it's the end of the quarter as well, so a quarter of the year has actually gone. Anyway, you know what I mean. I love the Easter weekend. I don't know why, always have, ever since being a kid, not for religious reasons, but just purely because it just, I don't know, it's a great long weekend that just is the start of sort of spring, and it feels good and things are happening and you can get out and about and all that sort of stuff. So I know that many of you will be working over the Easter break, so just want to send you great wishes for whatever you're doing and wish you a great weekend. Now, I've been in a bit of a mental wealth malaise over the last week, I've got to say. And I'll tell you why. One is that I had another bout of bloody man flu again. I don't know where I got it from. It must be meeting with all these people, I think, is probably doing it. It's not good for you. But anyway, yeah, a bout of man flu again. And I will be honest, I won't tell you exactly the details, but I had an emotionally draining situation that happened to me a couple of weeks ago. And whilst I'm probably very well tuned into the whole fight or flight sort of mechanism that we have internally, this particular one actually made me go into freeze mode. I don't get that very often, so it's time to sort of stop and take a listen to that, really. But what that basically meant was that I felt numb and stunned and disoriented. But I'm not going to get into all that sort of self-absorbed reflective stuff. I'm just wanted to let you know, really, that I'd been a bit quiet last week on social media and had hibernated a bit, not just because of the man flu, but also because of going into this sort of freeze mode. And it's only really been today that I've kind of really heard in myself what that actually means. And I want to share with you 3 things that I've learnt during the course of the last week. Now, I did put this in a LinkedIn post, so if you've seen this, then apologies and you've heard some of this already. But anyway, what I wanted to just share with you was the 3 things that I learned from my sofa while I was in freeze mode. The first one, never apologise for who you are. And I'm going to ask you to say that again in your mind, but this time add in whatever expletives work for you and whatever gusto that you need. Never, ever apologise for who you are. If people don't like you or what you say or what you do, they're not your people. And don't change who you are to match your surroundings. You're better than that. You deserve more than that. The second thing that I learned was to really surround yourself with people that bring you joy and vice versa. Now, you'll know from previous Men Able moments and other conversations that we've had that my mission this year is to bring joy and spread that joy and to help everyone to have happy lives again and to, pursue those targets and those goals, but do it in a joyous way and create great experiences for everyone around them. So what I'd ask you to do is, and I'm sharing this learning with you, is surround yourself with those people that bring you joy. But notice the people that you interact with and how they make you feel. And if anyone around you isn't bringing you that joy, it could be that they need you. They need your help and they need some support in some way. So do that in your own special way. You know what that is. And just be you. Again, be unapologetically you and use that to spread some joy. And as one of my lovely clients says to me, and I'm going to quote now, and I'll change the word that they actually use, but they say to me often, I love speaking to you because by the end of the call, I feel less SH1T. Insert the word there. So I love speaking to you because by the end of the call, I feel less thing. I'm going to have that. That's a joyous moment. That's spreading joy right there. That is doing exactly what we're talking about, which is spreading some joy and just having people feel great as a response or result of dealing with you. Not everyone's there, and some may not want your joy, so in which case, move on. But for those that do, or those that want your help, then do what you need to do to spread some joy. Now, the final thing that I've learned as well, as a reflection, is to notice what's keeping you small. And, I see a lot of stuff out there about, goals and setting objectives and people thinking big and all the rest of it. And I think a lot of the thing that gets in people's way of doing that is that they think small. And we often think small because of our conditioning, our upbringing, our education, whatever it might be. So take some time out this weekend while you've got some time. If you're having a long weekend, take some time to think about what is keeping you small. And I don't mean in stature like me, but I mean small in your thinking. Is the behavior and the expectations and the opinions of others, is that what's preventing you from being you and properly being who you can really be? So, just a few thoughts there. 3 things that I've learned over the course of this week whilst being in this sort of mental wealth malaise, this kind of meh, best way to describe it. That's MEH, by the way, in case you're wondering. So, have a joyous weekend, spread lots of joy, and if your team need to hear that message, let's talk. Let's have a chat. I'm on a mission over the next few months to get round as many places as possible and help your teams and your businesses to hear that message and spread some joy. And if you'd like to have a chat about that, you know how to get hold of me, stephen.witten@menable.org, or I might be all over LinkedIn. Anyway, have a great weekend and we will catch up again soon. Bye for now.
Well, I tell you what, Phil, Steve has set the energy levels rather high for the second half.
It was up there, wasn't it? We've got to continue it now through the
we've got to keep that buzz going.
We have. We'll do our best, but we have got the continuation of the theme. So we're remaining with OEMs for the rest of today's podcast, and we'll try and keep it as upbeat as possible, following that from Stephen. And as Stephen said there, sharing the the mental wealth and the buzz there. And as he said, you know how to get hold of him either on LinkedIn or through menable.org or stephen.witten@menable.org, and he'll gladly have a conversation with you. And if you don't feel buzzed up after that, then I don't know what will.
So, meanwhile, back to the headlines. AM Online, the headline there is Mini and BMW top brand loyalty list reports judge service. And Phil, you'll be pleased to know there's a top 10
I've seen it already.
Yes. You've seen it, great. So this is some new research from Judge Service, which I helped the guys put together for the press release. So I did see the data, and you know what, it's really fascinating. So this is the second time they've done this research, and what they've done is they've pulled together data from 28,800 buyers, car buyers, consumers. And what they were trying to do is identify brand loyalty by brand. So what they've done is they've looked at buyers who have made an inquiry or been to a franchise dealer and subsequently bought a car from another franchise dealer, but they stayed with the same brand. So it's tracking that customer journey through from that initial inquiry and finding out what they bought at the end. And within this, they did find that of all the brands that were surveyed, Mini and BMW, which, let's face it, are sold from the same site, they rank the highest in terms of brand loyalty, and that's really strong message both for the BMW and Mini brands, but also their dealers.
No, it is great news, because I think it's kind of, you don't hear much of BMW Mini at the top of these kind of league tables, do you? They're there, but they're not really at the top when it comes to these kind of things. But so a great performance there. And there's also saying that although Land Rover had slipped from second place to third place, it's also improved its score from 54% to 56%, and shared its position with Mercedes, who moved up from fourth. So a little bit of a move around there, isn't there, in that top 10?
Yeah, and I guess what's also worth sharing is that because this is now an annual survey, that they can show the sort of year-on-year differences. So nearly 2/3 of Mini customers, that's 64%, stayed with the brand after purchasing elsewhere, and that's up from 57% in 2023. And likewise with BMW, they significantly improved their score from 53% in 2023 to 63% this year. But I know you're eager to hear the top 10. So
Yeah.
Here we go. So number 10, Ford. Number 9, Volvo. Number 8, Toyota. Number 7, Jaguar. Number 6, we've got Volkswagen. Number 5, Audi. At joint number 4, there's Mercedes-Benz and Land Rover. Number 2, BMW. And number 1, Mini.
Yeah, and interestingly, within the store, they talk about Skoda, who's dropped out of the top 10, slipping to 11th. Position from the 7th position they held previously. And Cupra, interestingly, has fallen from 8th position down to 18th position. Now, I suppose part of that is questioning whether it's actually others moving up or they've moved down, if that makes sense. Yeah. Is it better performance by some of the other brands this year that has knocked those franchises out of the top 10? But Neil Ladley, who's the managing director of Judge Service, has said that their research highlights the power of aspirational premium marks in driving brand loyalty, as demonstrated by the strong performance, as you've mentioned there, Curtis, with both Mini and BMW.
Yeah, and he goes on to say the proof that brands viewed as more traditional volume players can still build lasting relationships with customers, because there's the likes of Ford, Toyota, in that top 10, and they are building that brand loyalty, which maybe you wouldn't normally associate with some of the sort of more mainstream volume brands.
No, and it's going to be quite interesting as we go through this transition of electrification and agency, whether it's been deferred or not, is how you might start to see some of these top tens shift around as we manage our way through this one. So I'll be looking forward to the next lot of results from Judge Service on this one. But sticking with manufacturers and OEMs, the theme of today, Nissan looks for partnership to cut electric vehicle costs. Now, this has been covered by the Financial Times there, saying that the chief executive says we cannot do this alone as car maker responds to the threat of Chinese rivals.
Yeah, this really is a fascinating one. So Nissan plans to cut the cost of manufacturing its electric vehicles by 30%, and that will be through new partnerships and manufacturing methods as the car maker responds to the rising threat from Chinese rivals. Now, this follows hot on the heels because it was only a week or so ago that Nissan and Honda announced that they would be collaborating on EV projects, which in itself was a big story because they are traditionally arch rivals.
Yeah.
But it's the reality of what's happening in car manufacturing at the moment, and those traditional or legacy brands adapting to this new competition from emergent EV brands, certainly those coming from China. And with Nissan, it is particularly interesting in that they already have the alliance with Renault, albeit with Renault now at a much lower stake than it was traditionally, and indeed Mitsubishi. So it is looking beyond those existing relationships and does want to hook up with a brand that can give it a lower entry point into EV production and EV sales.
Yeah, and I mean, what I sort of looked at was quite fascinating within the story here, saying that the business plans on Monday they said they were addressing how a car maker of its size will be, which is with relatively small annual sales of fewer than 4 million vehicles, would finance the cost of new technology development and survive the transition to electric vehicles. And the strategy aims to lift annual sales from 1 million units by the end of 2026 fiscal year, which ends in March of 2027. But it goes on to say that under the plan, Nissan will launch 30 models over the next 3 years, of about half of which will be electric vehicles, plug-in hybrid cars, and other electrified versions. So, got some significant growth plans there, haven't they, for the next 3 years?
Yeah, and I can imagine Nissan dealers listening, thinking, 30 new models? Really?
I'm assuming they're not all for individual markets, but
Yeah,
yeah.
this will be for different markets around the world. But this, of course, does follow on from a story we reported, again, just a couple of weeks ago, about VW doing something very, very similar. Volkswagen is looking for partners because it wants to produce an EV costing less than 25,000 euros, and the only way it can do it is by partnering with another brand and sharing some of those costs. So this is a trend that we're going to see more and more of. And within this story, it goes on to say that Nissan actually wants to make the cost of producing EVs the same as for traditional combustion engine vehicles by 2030. So that's a fairly tight deadline that it's on.
And segueing nicely, because Nissan were in conversations, or reportedly in conversations, with Fisker recently. And I think we did cover the story on the podcast that there was looking at a partnership there. But latest from Fisker is that Fisker deal talks with big automaker collapses and New York Stock Exchange to delist the stock, saying that Fisker's cash reserves insufficient to meet certain debt obligations, and that the New York Stock Exchange plans to delist the stock from the market. Now, this is a sort of story that's been covered quite widely in that sort of that trading sector, both in Reuters and the Trading View. But this is a fascinating story.
It is, isn't it? Because you would you would assume that the fit between Nissan and Fisker would have been pretty good, because Fisker is delivering pretty much what Nissan is looking for on the EV side. But this story is actually about an unnamed car maker. So Fisker was actually talking to another car maker, and that deal has fallen through, and it has left Fisker in a very difficult position, because, as you say, they've now been delisted from the New York Stock Exchange. And this is causing a fair bit of uncertainty around the brand, because only last week it actually paused its vehicle production. And there's one particular analyst who's quoted in this story, Thomas Hayes, who is from Great Hill Capital, and he's talking about the growing chances of Fisker likely to file for bankruptcy protection. And he says, I can't put it if it's next week or next year, but it's inevitable. So, that is very much the word on the street in the financial markets at the moment in regards to Fisker.
And it is a shame, because we know that he's failed once or twice previously, but that was before he got a vehicle to market. Now, the new Fisker Ocean is a very, reports are it's a very nice car with a good price point for what it is. And obviously when Nissan were reported to be getting involved with it, you felt that was the opportunity for growth. And we know in the UK they've got the Experience Centre, is it down in London?
Yeah, at Westfield.
Yeah, and there's reports that there is an outlet in Newport Pagnell, an old Kazoo site there, that Fisker has got representation of. But because it is a shame that if this doesn't continue and they don't get the bailout or refinancing that's needed, that it's a car in the market at the minute. It's getting great reviews by the car write-ups in terms of what it does, its the design and its value entry point to the sector. But they do seem to be struggling a bit, and you do wonder what will happen next.
Yeah, definitely. And we'll keep an eye on this, because I suspect there's going to be more developments over the coming weeks on this one.
Yeah, there will. There certainly will be. But as Curtis said right at the start of today, very much a OEM themed podcast this week. Hopefully you enjoyed the snippet there from Jeremy Yeh from Cap HPI giving his views on the March market. But as we said right at the start, do tune into the podcast in your feed from earlier on in the week, when you can hear the full interview with Jeremy that goes in a little bit more detail, as Curtis said, around fuel types, which is obviously the hot topic of conversation. He obviously alludes in that conversation to some of the new entrances now that they're getting their latest movement within the valuations as they start to see what some of these new Chinese brands, how they are performing as a used vehicle as they become more prevalent in the marketplace. But more importantly, what Jeremy expects to see over the next month or so in terms of used vehicle values.
But you know what, Phil? That's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're back with the headlines next weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.